There's a moment in every trader's life when they finally understand the market doesn't owe them anything. Not fairness, not predictability, not even logic. It rewards discipline and destroys ego. That realization, it's the first lesson in risk. That's how Jesse Livermore approached every single day in the market, not with excitement, but with respect. See, most people think trading is about making money. Livermore knew it was really about surviving long enough to make money. He didn't chase profits, he managed exposure. He watched risk like a hawk because he'd already lost it all before. When I first read Livermore's story, the boy ticker runner who became a Wall Street legend, what stood out to me wasn't his fortune, it was his fortitude. He'd win millions, lose it all, and rebuild again. Each time more aware that markets were chaos, and chaos had rules if you were patient enough to observe them. And that's what today's episode is about, Livermore's formula for surviving market chaos. Not thriving yet, surviving. Because survival in trading is victory. Let me ask you something. When volatility spikes and screens flash red, what's your instinct? Do you double down or do you step back and breathe? Comment your answer below. I want to know how you handle that storm moment. When the market goes into chaos, most traders think faster trading equals more control. But Livermore knew better. He said, the big money is not in the buying or the selling, but in the waiting. That line wasn't about patience for profit. It was about waiting for clarity. In chaos, waiting isn't weakness, it's wisdom. And if you've ever blown up an account, you know this truth. The pain of loss isn't just financial, it's psychological. It eats at your self-worth. It makes you question whether you're even cut out for this game. Livermore faced that same demon many times. But he kept coming back because he understood something most traders never grasp. The market's chaos can't be controlled, only survived. And the survival depends on one thing: how much risk you allow yourself to carry when you're wrong. So in this story, I want you to imagine that you and I are sitting together, two traders watching the market in its wildest hour. I'll walk you through what Livermore saw, what he thought, and why he did the opposite of what most people would do when panic hit. Because if you can understand how Jesse Livermore thought about risk, you'll stop fearing volatility and start respecting it as the very thing that defines every trader's fate. Music shifts to a low, rhythmic pulse, like a heartbeat. We're about to go deeper into the storm, into that place between fear and fortune, where every decision matters. Because surviving the market's chaos isn't luck, it's mindset, mathematics, and self-mastery. Let's step into that mindset. Every trader starts with confidence. That's the paradox. The very emotion that gets you into the market is the same one that can take you out of it. When I first began trading, I thought confidence was everything. I believed if I just trusted my analysis, my charts, my signals, my gut, I could conquer the market. But the truth? The market doesn't reward confidence, it rewards control. Jesse Livermore learned that the hard way, again and again. He used to say, there is nothing new in Wall Street. There can't be, because speculation is as old as the hills. And that quote? It's not about patterns or price, it's about people. The emotions that moved traders 100 years ago still move them today. Fear, hope, greed, regret. The paradox of trading is this: you need enough confidence to take a position, but enough humility to question it every second after. It's like standing on the edge of a cliff, wind howling in your ears, trying to tell whether that step forward is a path or a fall. That's the emotional battlefield Livermore lived on. When markets are calm, discipline feels easy. You set your stop, you follow your plan. But chaos doesn't test your rules, it tests your resolve. When prices spike against you and your heart rate doubles, that's when your plan starts to look negotiable. Livermore called that moment the danger of the inner voice. That whisper that says, hold a little longer, it'll come back. Or add one more lot, you'll make it back faster. That's not strategy. That's survival instinct hijacked by ego. He said the market punishes traders who hope, because hope is the most expensive emotion you can feel in front of a trading screen. I've been there, watching a red candle grow, refusing to close it because I didn't want to be wrong. It wasn't even about money anymore. It was about identity, about pride. And that's what Livermore understood long before psychology became a trading buzzword. He realized that the greatest conflict wasn't between you and the market, it was between you and your own belief about who you are as a trader. The paradox is simple but brutal. The more you try to control the market, the more it controls you. The more you accept uncertainty, the freer you become. So here's my question for you. Have you ever broken your own rule because you felt sure you were right? Drop your answer in the comments. I want to see how many of us have faced that exact battle, the one between conviction and collapse. Livermore once said, "A loss never bothers me after I take it. I forget it overnight. But being wrong, not taking the loss, that is what does the damage." And that's the heart of the paradox. Confidence makes you enter. Ego keeps you trapped. Only humility sets you free. Music builds slightly. The rhythm of market chaos begins to pulse again. The market doesn't destroy you with one bad trade. It destroys you with 1,000 moments of hesitation, each one eating a little piece of discipline until you're just reacting. In that moment, you stop being a trader. You become a gambler wearing a trader's mask. And that's where Jesse Livermore drew his line in the sand. Because he believed if you can master that conflict inside you, you can master any chaos outside you. The most dangerous place a trader can be is not when they're wrong, it's when they're almost right. That's the zone that destroys more accounts than any crash ever could. When I think about Jesse Livermore, I don't imagine him as a man chasing glory. I picture him sitting in silence, a pen in hand, a cigarette burning low, watching prices tick by on a tape machine, thinking. Because to him, trading wasn't about prediction, it was about perception. And the hardest thing to perceive in this business isn't the market, it's yourself. Most traders think the enemy is volatility, those wild swings that wipe out positions. But Livermore knew the real enemy was comfort. That illusion that you understand what's happening, that you're almost right, so you hold on just a little longer. And that little longer is where accounts go to die. Let me tell you what that trap feels like, because I've been in it. You make a trade. The setup looks perfect. The market moves against you slightly, nothing major, just a pullback. You tell yourself, it's fine, it'll bounce. You even add to the position, convinced that you're improving your average. The market dips further. You say, it's temporary, I've seen this pattern before. And before you realize it, your position is twice the size, your confidence is gone, and the screen glows red. That's not bad luck. That's ego refusing to surrender to reality. Livermore called that the death spiral of conviction. It starts with belief and ends with denial. You see, being wrong hurts, but being almost right feeds the illusion that you're in control. And that illusion is addictive. It's the same hit gamblers chase at the slot machine. Just one more spin. I'm due for a win. Livermore knew that the market's greatest weapon wasn't price volatility. It was psychological inertia. The inability to cut loose from a decision that once made sense. He said, the desire for constant action, irrespective of underlying conditions, is responsible for many losses in Wall Street. That line hits me every time, because it's not just about trading too much, it's about needing to feel right, to feel involved. We can't stand being spectators to chaos, so we try to control it. But here's the truth Livermore lived by. The market rewards those who can stay still while everyone else moves. The ones who can admit they're wrong faster than others even notice what's happening. And that's the trap most traders never escape, the addiction to being right over staying alive. It's subtle, seductive, and it never feels dangerous until it's too late. Every time you say just one more trade, every time you move your stop just a little lower, Every time you refuse to close a loser because it's bound to turn around, you're falling into the same trap Jesse Livermore warned about a century ago. He said it simply: the market does not beat them. They beat themselves, because though they have brains, they cannot sit tight. So let me ask you, have you ever known you should close a trade but didn't? What stopped you? Fear of loss or fear of being wrong? Comment below. I want to hear what that moment felt like for you, because that's the real battlefield, not the market, not your strategy, but the inner voice that whispers, maybe this time will be different. The rain fades into silence. A heartbeat sound rises, slow, deliberate. And that's where Livermore began to build his philosophy. From that quiet understanding that chaos doesn't kill traders, comfort does. The market is never wrong. Only opinions are. That was Jesse Livermore's creed. Cold, simple, brutally true. When I first read that line, it stung. Because like most traders, I wanted to believe I was fighting something, that the market was my opponent. But Livermore never saw it that way. To him, the market was neutral. It had no agenda, no emotion, no morality. If you lost, it wasn't because the market tricked you. It was because you refused to listen. Livermore understood the market the way a sailor understands the sea. You don't blame the storm for being a storm. You respect it, study it, and learn how to survive it. That's the perspective that separated him from nearly every other speculator of his time, and it's the same perspective modern traders still struggle to adopt. He believed risk wasn't something to fear, it was something to price, and he did that by listening. Not to other traders, not to news headlines, but to price action itself. He said, "There is nothing mysterious about speculation. It is merely the study of human behavior." That's why his entire philosophy revolved around one thing: don't argue with the tape. When the market spoke, he listened. When it moved against him, he didn't fight back. He accepted that being wrong was part of the job, that cutting a loss wasn't a failure, it was a form of self-respect. Think about that for a second. How many times have you ignored what the chart was clearly telling you because you didn't want it to be true? Because your analysis, your bias, your conviction said otherwise? Livermore didn't believe in loyalty to a position. He believed in loyalty to truth. And truth in the market is simple. Price is reality. Everything else is opinion. That's how he survived chaos. When markets crashed, others froze, trying to rationalize the irrational. Livermore adapted. He'd say, "I never argue with the tape." If prices were falling, he didn't ask why. He asked how far. He wasn't interested in being right. He was interested in staying solvent. Now here's what's fascinating. This mindset wasn't emotionless. It was deeply emotional discipline. Livermore didn't ignore fear. He acknowledged it. He said fear was a signal, not to avoid risk, but to manage it. He viewed the market as a mirror of human psychology. When everyone else was greedy, he got cautious. When everyone else panicked, he got curious. He knew that chaos was just collective emotion, fear and greed moving prices faster than logic could keep up. So instead of predicting the market, Livermore interpreted it. He read it like a story unfolding in real time. And that's where his strength came from. Not knowledge, but awareness. That's what I try to remind myself every time I trade. The market doesn't attack you. It reflects you. If you're desperate, it'll expose it. If you're arrogant, it'll punish it. If you're patient, it'll reward it, eventually. Livermore knew that chaos wasn't a threat. It was an opportunity, but only for those disciplined enough to wait for alignment between their mind and the market's rhythm. And that rhythm never lies. What do you think? Do you agree with Livermore that the market is never wrong, only we are? Comment your thoughts below. I want to hear your perspective on that mindset, because it's one of the hardest truths to accept as a trader. Music shifts from the calm hum of the trading floor to a slow, rising orchestral swell, hinting at coming tension. Because as we'll see next, even with all his wisdom, Livermore wasn't immune to the psychological traps of chaos. His philosophy was tested brutally when his own mind turned against him. There are moments in history when one man's conviction collides with the chaos of an entire world. For Jesse Livermore, that moment came in October 1929. Imagine it, the height of the roaring 20s, markets soaring, champagne flowing, newspapers screaming a new era of prosperity. The Dow Jones had tripled in just a few years, and everyone, from shoeshine boys to bankers, was trading. It was greed disguised as optimism. And in the middle of it all stood Jesse Livermore, a man who'd already made and lost multiple fortunes. He'd seen this movie before. He recognized the rhythm of mania. While the world danced in euphoria, Livermore sat in silence, eyes on the tape, reading the tremors beneath the surface. He said later, "When everyone is certain, the market is preparing to punish certainty." He started building short positions, quietly, methodically. Day after day, while others bought more, he sold into strength. He wasn't guessing, he was listening. Prices were rising, but volume patterns whispered something different. Distribution. Smart money exiting while the crowd was still celebrating. That's what Livermore called the turning of the tide, the moment when enthusiasm peaks and truth begins to seep through the cracks. His brokers thought he was crazy. His friends begged him to reconsider. Even his wife, Dorothy, worried he was losing his mind. But Livermore wasn't driven by emotion. He was anchored by discipline. Then came October 24th, 1929, Black Thursday. The opening bell rang, and panic erupted. Stocks plummeted faster than anyone had seen before. Margin calls, screaming brokers, phones ringing nonstop. But Livermore? He sat calmly in his office at the Sherry Netherland Hotel, reading the tape, just as he always did. He didn't celebrate, he didn't panic, he executed. By the end of the crash, while millions were ruined, Jesse Livermore had made over $100 million in 1929 dollars. Adjusted for today, that's billions. It was one of the greatest trades in history, and one of the loneliest. That's the part most people never talk about. Because after the chaos settled and the markets lay in ruin, Livermore didn't gloat. He didn't even smile. He later told friends, "It was the first time I saw what destruction looked like. I'd been right, but it didn't feel like victory." That's the paradox of trading at the highest level. Being right can still feel wrong. Because in chaos, success often means watching others fall. And even when your analysis is perfect, the emotional toll of surviving can hollow you out. Livermore understood that moment better than anyone. He realized survival wasn't just financial, it was psychological. To win in chaos, you had to protect not just your capital, but your clarity. That's why he always came back to one rule: control risk before you chase reward. He once said, "It is not the thinking that makes the money, it's the sitting. But the sitting must be right." That right sitting means discipline before desire, risk before reward. Because one without the other is just gambling, dressed up as strategy. If you were in Livermore's shoes that week, short while the world celebrated, would you have held your position? Comment below. I'd love to know if you'd trust your conviction or follow the crowd. Thunder fades. The ticking of the ticker tape slows. A moment of silence. Livermore survived that storm, but he knew another would always come. Because chaos never ends in the market. It only changes shape. And what he learned from that experience became the foundation for his most powerful rule of all. People think the hardest part of trading is losing, but sometimes it's surviving success. After 1929, Jesse Livermore was the most famous trader in the world. He'd done the impossible, predicted the greatest crash of the century, and profited when the world collapsed. Newspapers called him the boy plunger, the great bear of Wall Street, the man who broke the market. But behind the headlines, there was silence. Because Livermore understood something few could, that winning didn't erase the chaos, it amplified it. When you win big in the market, your perspective shifts. You start to believe you've cracked the code, that somehow you've transcended randomness. And that belief, that subtle confidence, is the seed of destruction. Livermore once said, "After a man makes money in the stock market, he finds himself in a position where he must fight for his balance all over again." He wasn't talking about financial balance. He was talking about emotional equilibrium, the mental stability to not let victory become poison. Because success whispers louder than failure. Failure screams learn, but success, it whispers you're special. And that whisper cost Livermore everything. After the crash, he continued to trade, but the markets changed, regulations tightened, liquidity dried up. The world he knew, the freewheeling speculative chaos of early Wall Street, was fading. Livermore's instincts, honed in a different era, started betraying him. He began to overtrade. He ignored his own signals. He added when he should have waited. He knew the rules, he just stopped following them. Sound familiar? That's the cruel irony of trading. We don't break discipline when we're losing. We break it when we think we can't lose. I felt that too. After a long winning streak, when every decision feels sharp, every trade feels fated. You start to believe the market respects you. But the market doesn't know your name. It doesn't care who you are, how smart you've been, or how much you've made. It only cares how exposed you are when it decides to turn. Livermore ignored that. He traded bigger, faster, more recklessly. The very mindset that once saved him, respect for risk, became clouded by the illusion of mastery. And soon, the man who had once earned over $100 million found himself losing it all again. His fortune vanished. His reputation dimmed. And this time, the recovery didn't come as easily. He once wrote in his notes, "The hardest thing in the world is to lose your perspective and not know you've lost it." That's what happened. The chaos outside had moved inside. Can you relate? Have you ever felt overconfident after a win, only to lose it all right after? Comment below, because that's where traders truly test their maturity. What Livermore went through next wasn't a financial collapse, it was a psychological reckoning. He realized that to survive chaos, truly survive it, he had to rebuild not his wealth, but his relationship with risk itself. Music softens. The storm quiets. A single note holds, suspended, unresolved. The weight of winning had nearly crushed him. But from that pain came his greatest clarity, the rule that became his compass for every trade that followed.
Every great trader eventually learns this one truth. The key isn't in making money, it's in keeping it. That became Jesse Livermore's guiding principle after losing everything. When the noise faded and the crowd stopped cheering his name, he realized something profound. He hadn't failed because of bad analysis or even bad luck. He failed because he stopped respecting risk. Livermore's greatest breakthrough came not from success, but from loss. He wrote in his private notebooks that the only constant force in trading, the only variable he could truly control, was risk exposure. Not prediction, not emotion, just exposure. He built a formula from that realization, what he called his risk before reward principle. It wasn't a mathematical formula, but a mindset formula. Here's how it went. Keycap 1: define the maximum damage before you define the dream. Keycap 2: trade only when conditions align, not when emotions demand. Keycap 3: pyramid profits, never average losses. Keycap 4: protect capital as if it were oxygen, because it is. That philosophy became his shield against chaos. He said, there is only one side to the market. It is not the bull side or the bear side, but the right side. And being on the right side didn't always mean being profitable. Sometimes it meant being flat, out of the market entirely. Livermore's rule was simple. If you cannot sleep because of your position, you're overleveraged. Period. No justification. No, it'll come back. just exit. He called it emotional stop-loss. Because to him, risk management wasn't just about money, it was about mental capital. He understood that stress compounds just like interest. Every uncut loss, every ignored rule adds emotional debt, and eventually that debt destroys decision-making. What's striking about Livermore's philosophy is that it's timeless. 100 years later, the same principles apply in every market, every time frame. You can't control the chart, but you can control your reaction to it. He believed that a trader's first duty wasn't to predict, it was to preserve. Because when your capital is intact, opportunity is inevitable. But when it's gone, even the perfect setup can't save you. Let me tell you, that shift changed the way I saw trading too. I used to think taking small profits and wide stops was smart, giving trades room to breathe. But Livermore's philosophy flipped that on its head. He believed the market rewards clarity, not hope. He said, "You must always assume the market is wrong until it proves you right." And that's the brilliance of his risk-first mindset. It's not pessimism, it's precision. He didn't fear chaos anymore because he had parameters. He could sit through uncertainty because he'd already planned his exit. And that gave him something no amount of money could buy: peace of mind. Livermore's breakthrough rule wasn't glamorous. It didn't make headlines, but it built a foundation. One that outlasted his fortune, his fame, even his lifetime. Because while markets evolve, human nature doesn't. And his lesson still echoes through every tick, every chart, every trader who's ever blown up and started again. Take care of the risk, and the reward will take care of itself. The piano swells slightly. A sense of calm returns, as if clarity has finally